As we approach the end of 2021, homebuyer demand has continued to exceed historical averages, while the supply of homes available for sale has continued to decline. This has led to continued upward pressure on prices. I'm Adina Dragasanu, Oakland Realty, here with your December 2021 market update. Let's jump right into the November stats and take a look at what's happening with sales, inventory level, and ultimately pricing. Starting off with sales, they were down 2% relative to October, but they were up 12% relative to November of last year. This November sales were up 34% relative to the 10-year historical average for the month. However, this increase in buyer demand has not been equal across the three housing types. If you recall, since the start of the pandemic in 2019, we started seeing buyer preferences shift away from condo living to more ground-oriented forms of housings like detached and townhomes. Over this last year, we've started to see this trend actually reversing. Sales of detached homes in November decreased 7% relative to last year. Townhomes have decreased 3% relative to last year. Sales of condos have increased over 33% relative to last year. The biggest challenge we continue to face in our market is the lack of supply. If we look at inventory levels, we see that supply of homes available for sale in our market in November was down 11% relative to October, and it was down 36% relative to November of last year. And this is the main factor of why we're continuing to see upward pressure on prices. Let's take a look at how this has impacted our sales to active listings ratio. The sales to active listings ratio for the month of November was 48%. This is up from 43.5% in October and up from 35% which we were seeing from June to September. This is our leading indicator showing us where prices are headed. Analysts say we start seeing upward pressure on prices when this ratio is over 20% for a sustained period of time, and we start seeing downward pressure on prices when this ratio is below 12% over a sustained period of time. Let's look at how this is playing out by property type. Townhomes are the most heated segment right now with a ratio of 74%. Next in line, we have condos at 54%. And finally, we have detached homes sitting at 34%. Let's take a look at exactly how this is impacting pricing. If we take a look at the HPI benchmark price for all property types, it finished the month off at $1,211,000. This increased 1% relative to October, and it's up 16% relative to November of last year. Let's take a look at how this breaks down by property type. Starting with detached properties, the HPI benchmark price index is up 1.1% relative to October, and it's up 20.8% relative to November of last year. For townhomes, this index is up 1.6% relative to October and up 20.2% relative to November of last year. And for condos, this increased to 0.9% relative to October, and it's up 11.5% relative to November of last year. What we've seen on the ground working with our clients in the last few months is that a lot of clients who are thinking of selling and moving up in the market have taken a step back as they weren't able to find homes that met their needs with a low inventory out there. Moving into the new year, we do expect to see increased inventory coming onto the market, and hopefully this will ease off some of the pressure. However, it's not certain that the inventory coming on will be enough to satisfy the built-up demand. And if this is the case, we will likely continue to see upward pressure on prices into 2022. If you're thinking of making a move in the new year, get in touch and let's create a plan to help you get ahead of the market. And in the meantime, to stay up to date with what's going on in the market, be sure to follow me on Instagram at adina.yvr and subscribe on YouTube for more updates. That's it for now. Wishing you and your family very happy holidays and all the best for the new year.